Everything is like freezing up. All right. Perfect. If you got any questions, just type it in the chat or just talk, and I'll be able to help you out instantly. All right. So basically, welcome to Forever in Profit. Basically, what we're about long-term trading. We don't trade the M5. We don't trade the M1. We don't trade the M15. The reason behind that is because the truth is they're trap charts. Um, we are a forever in profit chat. Like we really do make that type of crazy profit. We do long term for a lot of reasons. As you can see on the H1 chart, that's where our primary focus is at. We don't use the M1 chart at all. Just too much movement. Can't really like dictate where the chart is gonna go, where your candles are gonna go. As you can see when I zoom in, you got gaps, you got a lot of movement happening in the market that you can't really like determine if you're gonna win. Not even price action can help you on M1. M5 chart, we don't use the M5 chart at all either. This is just as well as traps. It's just basically 5 candles from the 1 minute chart that make a 5 minute candle. So it's basically doing the same thing. It's like 5 of these candles that make one candle this. And that's not a true reversal pattern. M15 chart is questionable, but we don't use this chart either. A lot of traps also appear on this chart. A lot of fake outs. Price action gets broken out a lot of times on this chart as well. So we don't use this chart. Forever Profit uses the M30, H1, H4, day one, weekly one, and the monthly. Now the reason behind that is I'm about to explain. We focus also on USD CAD. We don't focus on the euro. The euro's been very choppy lately. It's had a lot of ups and downs. You guys can hear me okay? All right. So the euro
Yeah,
has
I
a
can
lot
hear
of
you perfect. Go ahead.
perfect. So the euro has a lot of ups and downs lately, and basically we don't really want to focus on that chart. Um, It's not something I would recommend a lot of people to trade on, but everything is also predictable in the market, and I mean everything. Okay. Now if we go look at the monthly chart, where I always start my day, as well as news. Are you guys familiar with news? I'm pretty sure Anderson, Kersel, I kind of told you already. Marcos, I'm pretty sure you're up to date on that because you are in W3A. Um, Basically what we do is that I go to the monthly chart and I see. Let me clear this up. All right. Basically, we go to the monthly chart, and that's where we start looking for the trend. Now, for the people that's new, you might have a lot of success while coming into this chat, and I'm gonna show you why. We focus on the USD CAD for this one reason, and it's also this movement happened on other charts. As you can see on the monthly chart, if you're familiar with the M's and W's, we have a W-shaped figure right here on the monthly chart. Now you're probably just looking at it like, oh, okay, that's just a W. But no, the truth is, this happened. This W formed. It took 6 years to make. Okay. The outside part took only 1 year, 3 months to make. And what happens to the left usually happens to the right. So what's gonna happen in the marketplace? This is gonna all fall, and they're already starting, as you can see right here. So if we do simple price action, technical analysis, we see that the resistance is already cutting this off with wicks. As you see on the left side of the chart, there's already wicks forming. So what does that mean over here? The market is not going to go up. This W that it forms, it already did its rise. It had a long rise. It even had 1, 2, 3, 4, 5, 6 months of rise. The last month right here was just a high takeoff, and in February, it started to drop. As you can see right here, it dropped February 1st. The market just started going down little by little. And what's gonna happen is this is gonna fall for 1 year and 3 months or more. The reason behind that is because this is the first level support. Okay, and when you have support, that's a strong level support because you see the reversal pattern, which is in a golfing candlestick. The market is just gonna keep falling. It's gonna keep falling, keep falling, keep falling, and then you know your true trend of this chart. Now in Euro USD, it's the same thing. It's just the opposite, and I can prove that because they're in reverse on candle charts, candle pairs actually. As you can see here, we have an M, which is a little harder to see which is right here. Move this over a little bit. About right here. All right, perfect. So you can see that. We have an M. As you can see, the market went up and went down, went up, and then dropped. This M is not going to start going back up. It's going to trace this outside. As you can see, this high rise is going to do that. And USD CAD is just the opposite. Like I said. So you know where the money is about to be coming in. The market is just that strong, predictable. So what's going to happen is, since we understand how the market is going to run on these two charts, we focus on USD CAD because a bearish trend is actually more smoother than a upwards trend, which is a bullish trend. Okay. And another thing that you're going to want to do is, once you understand how the power long term, which is the monthly chart, you understand the trends. You're basically going to know where the news is going to go, where the market's going to go, where the flow of things is going to go. You're not going to go against the market. You're going to go with the market. You're going to go with the trend. I perform price action. Price action is basically something that happens with the chart, and it goes with price. Price is king. I don't care about the indicators. I don't care about what type of session you trade. It doesn't matter. Everything has a trend inside of a trend. So if we go to the weekly chart on USD CAD, we're going to notice two things. Resistance that I did on the monthly chart, which is here. As you can see here, I drew this line up here. We're going to realize that on the weekly chart, it's respecting that line. It's not going past this line. It tested, it did a reversal engulfing, and this market is just going to fall. This is the weekly chart, okay? So that clarifies that the monthly chart is now true. This is where the money is about to be made. Like, I'm not playing games with this chat. Like, this chat is really going to blow. So as you can see in the weekly chart, it's already forming. It did like a little semi-M, and the market is just going to crash. Now, what the market makers do is very simple. The market makers do not play. What they do is they do M's and W's to throw people off, and you can find it in within the writing of the code, which is the line chart. Okay, so you look at your candlesticks and you're like, okay, wow. But if you look in the line chart, it shows you the letters. It shows you it. It did a W and now it did an M, and the market is gonna fall. This is on the weekly chart. It did an engulfing and engulfing. Now, how did it get these two engulfings? It's very simple. Midweek reversal. The concept is gonna be beyond simple. So we already know this week the market is gonna fall. So if you're getting in the trade, see this long wick, it tried going up, it didn't work. This was the earliest of the week, which is the midweek reversal, which I'm going to explain this red candle, the wick, and how it started to drop. Now, if we go to the day chart, we're going to notice two things on this day chart. We're going to see a lot of consolidation at the top, which corresponds to this consolidation on the monthly chart. And this corresponds to the same thing on the weekly chart. Okay, on the day chart, we see that it's a reversal pattern, and the market is about to drop drastically. Whatever happens to the left must happen to the right. I don't know why the market does that. It just do. So you see these long candles on the day chart. Within the next few days, we're gonna have a strong downtrend. Okay. Now if we go to the H4 chart, we do see the pattern. You're probably looking at it like, wow, what is this? But the truth is, this pattern, it's called midweek reversal. This is where we focus on our money, the long term, not the short term. All right. So now whenever you see the H4 results of what's happening in the trend, which I call the true trend, we just want to catch these movements because every candle they see here is just 4 H1 candles. So if you see reversal here, boom, engulfing, it lasted a while. Because when you got a reversal, it lasts a while. It doesn't just fake out on a higher time frame. Once you got a reversal, it lasts a while. I'm going to keep saying it. Boom, you got another reversal. Boom, another reversal. Boom, another reversal. Boom. This is NFP, huge reversal. It's not going to retrace. I could place a whole bunch of orders right here for standards, and I know I'm going to be in the win. Okay, because I'm gonna explain what do I mean by that. Because there's gonna be another midweek reversal coming up, and this is gonna probably get retraced to like up here. Now if we go to the H1 chart, where I do all my chart watching, all my focusing on, but I do not always do my entries on this chart. It's basically because of two reasons. The trend. I don't do my entries on this chart 100% because it's going to be a little late entry, and I know I could have gotten it on this doji instead of getting at the close of this candle. Pull up this so you can see it better. All right. Now, if we go look at this, very simple. This was last week before this week's midweek reversal. So the last week we had a Morningstar pattern. Okay, this Morningstar pattern is our midweek reversal pattern. This happened at 3 in the morning, 4 in the morning, 5 in the morning. It took off. Okay, that's why we focus on midweek reversals from 3 to 8 a.m. because it always happened from 3 to 8 a.m. Tuesday, Wednesday, or Thursday. If you get in the entry here, I do want you to know how long this went up. If we go to the H4 chart, what do you see? A lot of 4-hour candles. It lasts a week. The cycles are like this. Sunday, it will hit the weekly because the weekly is open on a Sunday, which is the purple and the red. And then on Sunday, it will let you know where you can get a trend. Like right now, I have a sell-in, okay? Because I know that the market is going to hit. First, it's going to bounce off the weekly high, and then it's going to drop. And it's going to keep dropping. And I'm going to catch my entry on the weekly high. Because that weekly high is going to go all the way to midweek. Because the cycles are like Sunday through midweek and then midweek to midweek. So if you got in late, you could get in on a Sunday, ride it to midweek, take all your profits, and then ride it from midweek to midweek and repeat. And repeat and repeat and repeat. And that's how we've been making money. That's how a lot of people been making money. Especially Marco, for example. He went from yeah, amazing. You see Marco's like Marco Pips, he made 1,000 to 10,000. Rico went from 12 to 3,000, and this is more people that's gonna be making money. There's a lot of other people that I've been teaching this method to in another chat, and they all seen profit. And I was like, you know what? Let me bring this to W3A because I do not use Luciano, as you can see here. This is all technical analysis, naked chart reading, and basically just using the sessions to my favor. So what I'm gonna see right now. Why is Q calling me? Hold on. Q. Huh? I'm going. Yeah, I'm ready starting. I'm live right now. Yeah, it's recording ready in. Alright. Yeah. Alright, yeah, the sentiment. Alright. Alright, so basically we're back to looking at the H4 chart. So you see a lot of candles going up and you're like, okay, cool. And the only way that you can get in this trend, man, is at 3 to 8 a.m. Tuesday, Wednesday, and Thursday. We do not know when the pattern is gonna happen, but when it happens, you're paid. You're forever in profit. That's it. It's gonna last Sunday to midweek or midweek to midweek. If you catch this midweek reversal, I want you to know one thing. This is gonna last for 1 full week. 1 full week of movement. If I put on my day breakers, you even realize it.
Brian.
Yo.
Yeah, question. When you say midweek to midweek, what does that mean? I mean, when we get a
midweek to midweek is basically a Brinks trade. So what do I mean by that?
Okay.
Very simple. Look, check me out. A Brinks setup is when the market holds this position on the weekly low or at the weekly high for more than 90 minutes on a setup that you could catch. And it's basically reversing the trend. So let's just say, look, this was a downtrend. This was FMOC back in February. Okay, the market did a downtrend, and it had a midweek reversal a couple of times here already, but it had a midweek reversal. The midweek reversal said the trend is gonna go up. So people that's playing sells, it tricks them out, and the market makes tons of money for the people that's placing sells, and we got the chance to capitalize on the buy. So we're going with the trend. We're not going against it. I don't trade compared to like how a lot of people trade. I catch the trends 100% of the time. Market to me is 100% predictable. So what I mean, when we do midweek reversals, it lasts, let's say, for example, midweek to midweek, it will go from Tuesday to Tuesday. Make sense? Because the midweek will happen Tuesday, and the next one might pop up on a Wednesday. So it might be Tuesday to Wednesday next week. It might be Thursday to Wednesday. You know what I'm saying? So that's what I mean by midweek to midweek. And you could also catch it Sunday. Like if you got in a late entry, you could catch that one from Sunday to midweek, and then cancel all your profits, take all your profits, then go midweek to midweek and leave it all in. So the best way to get in on the setup is basically midweek to midweek. Make sense? so you don't have to deal with the
Okay,
Sunday.
because let me say this, because on the one that you're doing is the US CAD, right? So Canadian currency. So I already answered, and I know it's going to be going down, right? So but I answered it, I think last week Thursday.
Last week Thursday. It was actually last week Tuesday where the midweek happened on USD CAD, and it's been dropping.
I got it late.
You got it hella late. You probably got it. Let's see right here. I got you. This was. Hold on, I got you.
Actually, I got it Wednesday.
I got you right now. This happened on a Thursday.
Yeah.
So this is Thursday to Friday. Okay. This was Sunday to Monday. This was Monday through Tuesday. Then maybe happened on Tuesday. This right here is what's Monday? Tuesday. Tuesday through Wednesday was right here. This was Wednesday to Thursday. You got it over here, cause this is Friday.
Okay, so
Thursday to Friday. This is Thursday to Friday.
I caught it right there.
You got it in between right here, bro.
Like Wednesday, Thursday.
Wednesday, Thursday, cause it's Thursday to Friday. So Wednesday, Thursday, you got it right here in this square, somewhere in this square.
Yeah.
Okay.
Yeah.
I got it right here. Well, I actually had a trade right here for like 0.40, and I got what $400 off of this. No, like $200 off of this one. I had it set in and then whatever.
Okay.
Got a little pullback. But yeah, this is where you got in. So you need to understand your days. I actually have it set up so you can figure that out. I'm gonna post it in the chat. Actually, I'll do it now.
Okay. So now, pretty much, if I leave it open the midweek and just close it, I'll definitely make a bigger profit than if I just close it right now.
Well, what you want to do is leave your trades open midweek to midweek. You don't really want to leave your trades open from daily to daily, unless you know what you're doing. Like, you understand? I mean, I actually put the Brinks setup earlier, and you don't have to scroll up. But basically, it's just I just put the days on there instead of looking at it from 4 through 9. It's really 3 to 8 because of daylight saving time. So it's the same concept.
Okay. Oh, okay. Sounds good.
All right, my computer's just not happening right now. All right, so where we at? Back to the H1. So as you can see on the midweek, if you got it over here, you didn't have to worry about dealing with the daily sessions. You didn't have to worry about what happened all the way to next week. What is this? Happened last week, Tuesday, I said? Yeah, Tuesday. You didn't have to worry about it. You could have had your trade open from Thursday, last week, all the way to Tuesday. And then from Tuesday, all the way up to now, which is here. You see that? And what's going to happen is you're just basically waiting till next week, midweek, and then boom, you just get to catch the weekend. And you're good to go. Leave that in for another week. Set your volumes. If you can catch the trend, you can. I'm going to go over levels in a couple of seconds. But what I want to do right now is go over how to enter effectively on a midweek. Because we understand that we're doing Brinks trades here, right? And we do it Monday. No, we do it from Tuesday, Wednesday, and Thursday from 3 to 8 in the morning. Eastern time. That's mine, all right? I'm Eastern time. So whatever time is for you, 3 a.m. through 8 a.m., that's where you need to get onto trade. Because I will be talking about these trades in the chat. You're going to get blown up in the chat. Now, if we go to the M30 chart, we're going to realize two things on this M30 chart. We're going to see how the H1 basically formed this pattern. As you can see, we have the Morningstar pattern here, correct? Now, when you look at the H1, which is where I do all my chart watching, H4 for trends, H1 for the chart watching and levels, and 30 for entry. Let me say that again. H4 for trend, H1 for chart watch and levels, and 30 for entry. When I go to look at the M30 chart, and I go see my entry, I'm going to get in right here, okay, at this RR. RR is basically reversal pattern, which is, looks like an engulfing, looks like a piercing line, looks like a dark cloud. They had this basically is just a setup. I call it RR, so it's just basically everybody understands. So I call it out like, oh, I'm not gonna call out the specific pattern because there's too many of them. So I just call out RR, and basically this reversal pattern gave me this doji on the H1 because it wasn't really going anywhere, as you can see right here. Okay, when you get an RR on the M30 chart, you're usually getting a doji on the H1 chart. As you can see, these two candles that were falling gave me this long red candle right here. How do I know that? I cheat. I go to the time. I get my crosshair. I look at the 10, and I look at the 1030. So I know if I go to my H1, this whole candle happened at 10. This whole candle happened at 11 GMT, and this whole candle happened at 12 GMT. At 10 GMT, that is 3 a.m. for us. 11 GMT, that's 4 a.m. for us. And at 12 GMT, that is 5 a.m. for us. So this happened right here, 3 to 5. So that's how important it is to trade from 3 to 8 a.m. It took 3 hours for this to form. At 6, it had some pullback. At 7, it had 3 hits to the low finally, and then it took off. Okay, so now if I go look at the M30, like I said, right? The 10, the 14, and the 15, right? Let me see. 10, oh my bad. 10, 11, and 12. The whole pattern got taken place. Look at this. This is at 10. This is at 10:30. That was the red candle. The doji 11 to 11:30. That was the 11 on the H1 chart. The 12 to the 12:30 took that green candle, and this was the takeoff. This was your pullback that happened at 6. This was your pullback. As you can see, the third hit to low. 1 hit, 2 hit, 3 hits to the low, reversal. 1 hit, 2 hit, 3 hits to the low, reversal. You always gonna expect 3 hits to the low before the reversal. Okay? But if you want to get in right here, this entry, this is your entry. Boom. Took off. So you already know when you enter a trade, you're going to be in a negative anyways. Screw it. Boom. You could have got another entry right here because you would have known it took 90 minutes for this to form. So you got 1 standard right here, 2 standards right here. You would, at the end of the week, next week, you could have probably made about 2 or 3 grand. Probably even more. Okay? Reversal took place. You had your golfing. And that was pretty much it. That was lights off of this. Consolidation. Once it passes this line, because I had the blue tracer on, basically the blue tracer tells me when it's past the daily low and it past the daily high. Brinks is easy to see because when you have the blue tracer, well, I have a cell right here, so I'll just use this as the blue tracer right now. Basically, it becomes in a pit. As you can see, the candles have to be down here for more than 90 minutes. This is on the hour chart. So in this pit, this is your safe zone to get in entries. After that, you're not in the safe zone no more. You're going to get attacked by news. You're going to get attacked by consolidation. You're going to get attacked by spikes. And the good news about USDCAD, there's barely any spikes. Euro, I'll show you what Euro did. It's crazy. It's not as smooth. I'm going to show you reversal pattern from Euro that happened from that week to the end of it and what's happening right now in Euro. Okay? So what you see here, boom, this is your safe zone. This is your entry. You could have got a whole bunch of entries down here and you could have rolled out. Chilling. With an exit right here. When this was forming. And I'm going to show you another trick. So as you see, as the reversal took off, I use a 5 and a 12 simple EMA. I don't use the 7 and the 14 for the people that's in W3A. The 5 and the 12 act more quicker. Now, I want you to know the difference between a simple and an expo. When you're using a simple moving average, it is made better for long-term trading. When you're using an exponential moving average, it's better for a short-term trading style, meaning on a trap chart, which I don't use because you will lose most of your money, which is the M1, M5, M15. That's what you use expo. From M30, H1, H4, you would use simple. Okay? It's not about looking at your moving average for entries, it's looking for the reversal for your entries. This is just a confirmation. This was your takeoff. This was just you just chilling. Just chilling, just chilling, just chilling. And as you can see, the USD is a strong downtrend. It's a lot harder for it to go up. It has a more consolidation. Since it is a downtrend, look what happens. You have more bearish candles. This is why we focus on the trend. You see this? Meaning more pips for us, less stress for us, more money for us. We're forever in profit. And I want to show you this as well. These are my MM sessions. An MM session is basically telling me what time the session is about to start. The blue one is my Asian session, and my gray one is my London session. There is moves to be made outside of the session. Within inside of the session is usually consolidation or just going along with the pattern. Or sometimes you might see a reversal inside of a session. Usually it's found in the London session and one in the Asian session. Outside of the sessions is where you have the most pips for your moves. Right here, outside of the session before London even started, there was a move on the H1 chart. When you look at the weekly chart, and I mean the M1, M5, M15 chart, the London session is gonna cover this whole entire box. So you see the move inside of the session. But when you're doing it on the H1 chart, the moves are outside of the session. So you can see them clear as day. So boom, you have your Morningstar pattern outside of the session. Right here was a trap. Because if you're counting levels, it would have been like this. First level, second level, third level. My bad, I messed up. Tripping. Alright, so 1, 2, 3. This is actually 2 right here, consolidation. This is your third level right here. Oh man, you better not do that. My bad. Alright, so right here. Let me count it for you. This was your first level rise. You're looking for basically levels of rises. This consolidation became 2. This was 3. You always want to expect 3 rises. And then 4th, if anything. Okay, so it's always 3 rises and 4th rise. You always want to make sure that it might happen, but if it doesn't happen, get out on your 3rd rise. Do not stay in for the 4th. 4th, you're getting too greedy. So right here we have 1, we have 2. When a level consolidates, it counts as 1 full level. Oh my god, bro. Hold on.
Your line is now muted.
Yeah, hello? Yeah, I just got up. What you want? Babe, I'm gonna have to call you back. Come, I'm gonna do something for my grandma right now. Bye. Alright.
Your line is now unmuted.
Alright, my bad. Alright, I'm back. So basically what we're looking for right here is that we see the levels. So you just want to like count 3 levels and always expect the 4th. On the H1 chart, it's clear, way more clear to see the levels. As you can see here, it did 1 level, it did 2 level, consolidating. Like I said, the level counts when it consolidates. It counts as 1 full level. And then it did its 3rd level of rise right here. After it did 3 levels of rise, it did a drop. You can see right here, it did 1 level. It did 2 right here. It did 3. Reversal, took off. It did 1. It did 2. It did 3. It did 4. And then right here it did like a little consolidation, but it was after 4 levels. So it did 1, 2, 3 levels of drop. It reversed and went back up, finished the trend. I'm gonna have a whole bunch of pictures I'm gonna send to the chat about different types of levels. I think I did like 5 different types of levels, like discriminations of how they actually form. So when we go back to the M30, we also can see it here.
Ryan.
Yo.
So pretty much what you're saying is every 3-4 hours is a reversal.
No. Do not ever do no. Don't ever do that. Every 4 hours will not be a reversal. The reason behind that is these are hour candles. If we count, it basically went up. Right here, there was no reversal, as you can see. 1, 2, 3, 4. there was no reversal. It just consolidated. See that?
All right.
And then right here, it did a reversal, but it went up for more than 4 hours. So if you go by that, you're going to mess up. Like I said, I'm going to put the pictures up in the chat about how levels are counting on the H1, because there's actually a system put in place that I made for you to count these levels on the H1. When we look at the M30, it's because some people will count on different time frames. As you can see, there's a lot more candle movement.
But one candle means on the H1 hourly.
H1 right? Is an hour, correct. That's all these mean. Okay. M1 means 1 minute, M5 means 5 minutes, M15 means 15 minutes, M30 means 30, etc., etc., etc. Okay? And a weekly one means weekly, 1 week. So 4 hours and day one. Then the monthly is just self-explanatory, just a month. So as you can see here, on a midweek reversal, why do we catch a midweek reversal? It's just tons of profits. We don't have to deal with this consolidation, the news. Once you get in the entry, seriously, man, the entry is everything. I will say this again. I will keep saying it all the damn time. Entry is everything. This will consolidate. You don't have to deal with any of this. The only thing you got to deal with is finding the exit point. The exit points could be next week, midweek reversal. And then you exit, then you leave it in for the next following week, and then you exit, and then just keep doing that over and over. You won't even have to worry about getting in late as hell on a Sunday. Some people will do it on a Sunday if they know what they're doing to set a high volume and just let it ride to midweek because it's going to be guaranteed income. If you know what you're doing. Not a lot of people know about this. So what happens is, on the midweek, when this forms, we're getting a reversal pattern on a higher time frame. You know what that? You know, you see. I'm gonna show you this. Remember, this was going up from Thursday to Tuesday, correct? So if I go look on the day one chart, check this out. Oh man, what's up? If I go look at the day one chart, I'll take these off. You see right here? This was all going up.
Okay.
And if I go look on the H1 chart, remember what I told you about the if I have an RR on a smaller time frame, I'm usually on a high time frame, I'm getting a doji. All right, check this out. You see this right here, the RR engulfing on a higher time frame. What did I get? A doji. Make sense? So the higher time frame, the stronger the trend. So I get an evening star pattern right here. If I go to my H4 chart, you're just gonna see a broken down evening star pattern. So on the day one chart, I already got my play. I'm like, yep, I'm set for the week. Game over, lights out. See this? Boom, drop. Whatever happens to the left have to happen to the right. See this? 3 levels of rise. On the day one chart, boom, drops. If I go to my weekly chart, you're going to see another reversal pattern. This was going up from Thursday into midweek, and then engulfing, and it drops. So on the monthly chart, you just get consolidation. If there was a higher time frame chart, you would have had a doji somewhere else. Because remember, look at this. H4 gave me an evening star pattern. You see that? H1 gave me the RR. The day one gave me the doji. So you can see as the higher time frames go, the more money is to be made. It's just the way how it is. It's always going to be like that. It's just too simple. So when I look at these charts, they're predictable. People's like, oh, how you can predict NFP? How can you predict the news? Very simple. The news goes with the trend. It does not go against it. That easy. So you know you could capitalize. This was NFP. This was the news before NFP, which was a high impact news. I kind of capitalized right here. I was on the phone with Q and I got in like down here because this happened in 15 seconds. I woke up late. I was like, damn, it's 8:30. And I dropped right here. I was like, fuck. So whatever. Got my profit. Left my trading. Whatever. A lot of people really get capitalized on this movement. I missed out. It's all good. I'm catching next one. So what happened is we have these reversal patterns and we clarified on the weekly chart that the system is flawless. When you have a reversal, or for midweek reversal, on a higher time frame, you're getting that reversal pattern The higher the time frame, the stronger the trend. So that's how I know this market's about to drop. Not just drop lightly, but man, as you can see here, already you're gonna have some resistance. That's why on the H1 chart, we did have some resistance. It did a bounce. Now, what happens with new is since the trend is going down so fast, it's basically to just retrace what's happening on the left. As you can see right here, you see this little hover? It's like a little hit, bounce, like right here.
Yeah.
Right.
I see.
That move was supposed to happen right here. Look where it's happening at now. Because the news, the NFP pushed it. See that?
Yeah.
So wherever happens to the left, like I said, happens to the right. I mean, this shit is really, really true. It mirrors the left on a higher time frame. So this is going to drop. Midweek reversal, I'm predicting to be Tuesday or Wednesday again. Most likely it's going to happen on a Wednesday. I think it's going to fake out on the Tuesday. And then it's going to go up. It's probably right around here. It's going to retrace NFP a little bit. And then it's going to drop. Because I want you to know, Sunday, there's no market open today. Because it's Easter. So we're going to be looking for the midweek reversal to happen on Tuesday, Wednesday, Thursday. It might come a little late. It might even happen Thursday. But when it happens, it happens. So right here, we have the whole reversal. It looks like a pyramid. And I'm not going to even go through the... Matter of fact, no, I'll show you on the 15-minute chart. Screw it. 15-minute chart, I do not use. But I'll show you why. We have the reversal pattern, but look, we have a huge wick. If I saw a reversal pattern and I had a huge wick, and I'm like, yo, what's going on? I probably would have pulled out my trade. And then it drops. And then it has a pattern right here. And then you see the M, and it's like, okay, cool, it reverses, but goes into consolidation. Market goes all the way down here, consolidates, whatever. That wasn't even the beginning of the pattern, my bad. This was the beginning, which was this engulfing, this evening star pattern right here. I don't count levels on this. I don't use this chart. If y'all want to use that chart, I'm telling you, you can start losing money on that chart. And 15 is one of those trap charts. You want to stay away. And 15 is basically, you're going to get a better entry on the M30. Because you're going to have a better reversal pattern. M15 is just basically 2 candles on the M30. What we want to prefer, a more solid confirmation from the M15, on the M30, or the M15, which is a weaker confirmation. I'd rather a stronger confirmation, more candles forming to give me a reversal pattern. So on the H1, I have that pattern. That's a confirmation 100%. Because wherever we see a reversal pattern, you're most likely going to get it on another time frame. So if you're getting it on the M30, you're most likely to get it on the H1, guaranteed. Because H1 is just 2 candles at M30. That's all it really is to this. It's that simple. Sometimes people want to complicate trading, but it's not complicated. It's very simple. So what I do want to go over now is basically the Euro chart. So you can see the difference. Whoa. What the hell? Alright. So when we go to Euro, let me clear this up. I'm going to go to the H1 chart. So you can see what I mean by how noisy this chart is. You know, there's 80% of buyers and sellers on the Euro USD versus like 80% sellers and buyers on the USD CAD. So what do I mean by that? I mean lots less noise. It runs smoother. I remember, I think Marcos was the one that asked that question in the chat. And it was like a lot more less tricks, a lot less stoppier. Watch. This midweek reversal, like I said, it happened on a Thursday and it ended on a Tuesday. Look what happened on the Euro. Alright. We go to USD CAD. I want you to see how smooth this is. Even if I was to draw a trend line, I want you to see how smooth this really is. takes a big candle to break a trend. As you can see right here, boom. That's how strong that trend was. Let me go look at Euro. This same pattern that happened on the USD. Remember the inverse pair, so they happened at the same time. Basically there was the blue session marker right here, so this was your daily high. What happened was it was over here for over 90 minutes. Then it dropped. So if you had a good entry, this is where Rico really came up. He had 271 in his count and he flipped that to like 1.5 thousand. But he exited over here. He got scared. I was like, why? A lot of people some people that left it in, they had a lot more profit because they left it down here. So he cut it by 50%. He could have made over like 3K that day. Right here, you have the same trend. It was moving smooth. You had 1 level, 2 level, 3 levels to drop before it rose. And what happened was, if you look on the USD CAD, take these trend lines off now. And then right here, as you can see, the same move. It was just smooth. It was just going up. See how it just literally went up smooth. Your USD, look what it did. It went down 3 levels. It didn't bounce so hard. It retraced basically half a midweek. And then it went down really, 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 really slow. And even then, when it finally went to all the way at the end of next week, which was Tuesday, look what it did. It did a reversal here. And it did all of this consolidation. And then it went up, and then it went back down. So a lot of people was probably getting freaked out. And they got out the trades. I got out the trade because the chart was moving like hell. I didn't want to be in this trade. Like at all. So what happened is the market went up. And if you had NFP, a lot of people was thinking NFP was going to go down. I already told like numerous times the news go with the trend. And this is midweek. So the news is going with the trend. NFP pushed the market up. After it's been going down for so long. Okay? And look what happens. When I drew that daily from before. Boom. Right? It had some resistance. And it went down. Just like that. So, as you can see, when the market went down, it's going to go back up. It's already pushing its way back up slowly. It's going to have to keep going up. It has to go up high. On the, you see, it's just doing the opposite. It's bouncing. Euro. It went bearish and then it's going to go bullish. On UC, it was going bullish, now it's about to go bearish. And also the drop. If you look at the Euro, when it was doing its rise, it did all this consolidation, all this mess before it actually took off. As you can see on the UC, it's a lot smoother. They didn't really do all that. GBP USD is the same way. It's like Euro. Oh, I was marking up this chart. Let me delete this. This was the midweek reversal. This one happened on a Wednesday instead of the Tuesday. I think Rico got in down here, and this guy is like over $2,000 right now, all the way over here. Boom. Midweek reversal went up, but on this chart it runs like Euro. I want you to know that. GBP USD, AUD USD, they run just like Euro. So it moves, consolidates, it's like hell. And then it didn't really get anywhere to NFP. NFP is what pushed it out. If I go to AUD USD, it's even worse. And it runs like Euro. That's why I love the USD CAD. This is the most smoothest chart right now. This was the reversal. All messed up on the hour chart. The 4-hour chart, you probably see it better. Yep. You have a RR right here, and then it took off. So sometimes you might have to go on a higher time frame to see the reversal pattern. But if it was down here for more than 90 minutes, you already knew what time it is. You feel me? So you just have to go on a higher time frame to confirm it. So right here, we have the rise on AUD USD, and it got a little sloppy. consolidated, then took off. That's too long for me. I don't really like that chart. I like a chart that I'm gonna see instant movement. Boom. It's more sexy. Boom. Boom. So that's why we focus on this chart in that chat. It's more smoother, a lot more money to be made. You have like AUD JPY. It's another chart you can catch midweek reversals on. As you can see, it's a strong downtrend. So this midweek reversal went up, and now it's going back into a strong downtrend. I most likely might get on this chart this week. Let me see some. Probably might get in an ASAP action. Probably tomorrow. Yep. Reversal right here. Midweek reversal ended. Boom. So I'm expecting some consolidation before it does another midweek reversal, which is going to be down here sometime. Because it's in a strong downtrend. H1 right here. Boom. This midweek ended. In a way. Or is it still climbing? This is actually still climbing. It hits at the weekly low. It needs to touch the weekly high. The weekly high is all the way up here. So if you're getting in the midweek, you could have got trapped. Because this is actually moving pretty fast. So boom. If you can get in down here on this AUD JPY on the midweek reversal, you will be making a lot of money. Because this is going to go all the way up here to the midweek. Big fake out drop. And I don't even like trading this pair. I got so much used to trading the AUG. Matter of fact, let me just delete this. The USD CAD. I recommend everybody just to stay to that. But basically, that's what we're going to be focusing on this chat. I'm going to give people one-on-one sessions if they're having trouble trying to identify a Brinks trade. I'm basically going to be calling out from 3 to 8 a.m. because I'm going to be on the computer like a crackhead around that time frame. So I am going to call out the trade. When you're counting levels, I'm going to send out a picture. Actually, I'm going to send out the pictures right now in the chat. Whoa, got lit up. Post this, which is called pullback, which I told y'all, which is that time frame, which did happen around 6 or 7. That's a pullback. Documents. And then we have the different set of levels. So this is set 1. This would be set 2. So this is going to be your homework. To go back on your H1 chart and then try to identify the levels like how I identified it here. Because there really are sets of levels. And once you can identify these, you can be able to like make so much more money. Long consolidation right here. This is a good one. 1, 2, 3, then it dropped. And it went right into midweek. I'm going to show you that whole trend right now. That was right here. It faked out midweek because midweek, this bar was right here at the time. It got pushed down. It was a fake out. This happened on the Tuesday. Midweek, that happened on the Thursday. So as you can see here, these are your day session breakers. So right here you have one that happened on Tuesday. Wednesday, it consolidated, reversed on a Thursday. But the point is, it happened on Tuesday, Wednesday, Thursday. So you don't know when the midweek is going to happen. So I was waiting for this midweek to happen on a Thursday. So it rose, boom, did 1 level, it did 2. This doji right here passed this a little bit, so that was 3. Then it dropped 1, 2, 3 levels of drop, reversal. Could have stacked up right here on a whole bunch of trades or some high volume. Roll that out, and your account would have grew a lot. got out, rolled that to midweek, etc., etc. And like I told you, news go with trends. Then we go to FMOC. Boom. This long wick at the bottom. News went with the trend because it was going into an uptrend, and then it dropped. Midweek reversal. And then it exited out somewhere over here. It was right here actually, and then went to right here. Boom, midweek reversal to midweek reversal. As you can see, the downtrend. FMOC went down. Exit right here. You could have exited over here when it faked out, or you could have exited over here. You took the trade for a week, so you see how just the system is. Boom, another week. Then it drops right into this week. Boom. It's gonna keep going to midweek, so you're just gonna catch that rise, the drop, the rise, that drop, the rise, that drop. And I believe the FMOC news happened on a midweek reversal day, which would be, man, I need to get some food. March 18th. So we go look at the calendar. And we go look for March 18th. What is that? Wednesday. See that? And then reverse on a Thursday. That's how easy this is. It's not something complicated. And I'm planning on making people a lot of money this week. Like I ain't playing. So this is what I'm gonna bring to the W3A as well. Basically hope y'all got a lot of nuggets from this webinar. I'm gonna post it. And basically this is gonna be the focus for the week. Straight up. Alright, so basically, I'm about to drop the webinar right now. I'm done with the video. I'm gonna get some food. Hope y'all enjoy y'all Easter. If y'all need help with the system, basically I'm here. Q is here. Rico's here. We all know how to run it. I help them run it. They got profits. They understand how to run it. We run the market makers. The market makers do not run us. We control the market 100%. We look for the trends, and we're gonna win 100% of the time. We do not trade outside of the trend. And the secret is to follow the trend. And I want you to realize this too. I was going to bring out the secret, but I want you to see the secret. At 15 GMT is 8 o'clock. When this was dropping, at every time at 8 o'clock, there was a bearish candle. 8 o'clock in the morning. Okay? So right here, I had a drop at 15 GMT. The next drop was right here, 15 GMT. The next drop was right here, 15 GMT. So we're looking at this, right? NFP, what was it? 8 o'clock, 8:30 news? What is that? 15 GMT. So that's another secret. There's times, the market is controlled by time. Time, midweek, and a pattern of trends. So there's trends inside of trends inside of trends. And I found out all that information, so I'm planning to make people a lot of money. Let's get it. Hope everybody has a good weekend. And I'm going to post this webinar. Peace.